Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 25th of April. The Canadian dollar tumbled during the early Asian morning Tuesday following an announcement by US Commerce Secretary Ross that his nation will impose a 20% tariff on softwood lumber coming from Canada. The US said that the decision was a response to Canada's wood subsidies. US producers have repeatedly argued that Canada's government subsidizes its industry by charging low fees for cutting trees in government-owned lands, which results in unfairly cheap lumber prices. The big question in our minds is whether the Canadian government, which has already condemned this action, will retaliate in similar fashion. What's more, this move comes ahead of talks to renegotiate NAFTA that are set to take place in summer. In our view, the US action could set the tone regarding how those negotiations play out, and maybe the first sign towards a tougher US trade relationship with Canada as well as Mexico, considering all of President Trump's protectionist rhetoric during his campaign. All this confirmed the Bank of Canada's concerns with regards to trade uncertainty, which was the bank's main argument behind its recent cautious stance. Combined with the latest slowdown in the nation's CPIs, this uncertainty could keep the bank's finger near the easing button. Dollar cut traded higher yesterday after it hit support near the 134.25 line and the prior downside resistance line drawn from the peak of the 9th of March. The news gave an extra boost to the pair, helping it to emerge above the 135.30 hurdle and consequently to confirm a forthcoming higher high on the 4-hour chart. Currently, the rate is testing the 135.60 resistance, where a clear break is possible to open the way for a test near the key hurdle zone of 136. The 136 barrier happens to be the upper bound of the longer-term sideways range the pair has been trading within since September. A clear break above that zone is needed to turn the broader picture positive and make us confident on larger bullish extensions. Now moving to Australia, during the Asian morning Wednesday, the nation will release its CPI data for the first quarter. Expectations are for both the headline and trimmed mean rates to have risen, with the headline print returning back within the RBA's inflation target of 2 to 3%. At its latest policy meeting, the RBA appeared slightly more dovish, particularly with regards to the labour market. However, after that gathering, data showed that the nation's labour market recovered strongly in March, which makes the case for easing at the upcoming meeting less likely. Accelerating CPIs could decrease further the possibility for any action and may even prove cause for a slightly more upbeat message from the bank. As such, the Australian dollar could strengthen at the time of the CPI's release. Aussie dollar traded in a consolidative manner yesterday, staying between the support of 0.7550 and the resistance of 0.7585. Accelerating CPIs could encourage buyers to take control and perhaps set the stage for a test near the key obstacle of 0.76. If they prove strong enough to overcome it, they may push the battle towards 0.7625. Switching to the daily chart, we maintain the view that the broader path is to the sideways. The rate has been oscillating between 0.7160 and 0.78 since March 2016. Now, as for today's events, during the European morning, the economic calendar is very light. The only noteworthy indicator we get is Sweden's unemployment rate for March, which is expected to have ticked down. From the US, we get the Conference Board Consumer Confidence Index for April, new home sales for March, and the S&P Case-Shiller House Price Index for February. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.